What's up guys, this is most likely the last update I will be doing on Redbox and Chicken Soup. The merger is now complete and everything that I said would happen did in fact happen. Back in April, before the stock was trending when it was only $3, I started talking about the upside that was about to come. Within just 3 days the stock had gained 100% and by June the stock had reached a high of $18. Before the end of June I warned that this was over. I warned that this was going to end badly for anyone who keeps holding. There was a lot of people with agendas on social media saying that this stock was going to $100 and I took a lot of abuse for telling the truth. But earlier this week the merger completed with the stock at only $1.65. And judging by a lot of social media posts, a lot of people did not listen and have lost a lot of money. So the big question is, what comes next for CSSE stock? Now just to point out, sometimes these things are hard to see, but sometimes they are extremely obvious. For example, on Wednesday the 10th, tweeted about T2 Biosystems at just 15 cents. This hit 30 cents the very next day for a 100% profit in less than 24 hours. As I said a moment ago, I called RDBX stock at $3.50 and this reached over $18 at its peak. I called TBLT stock at $1.70 in June, which reached $9 earlier this month. And there are many others over the months such as VRM or SIRC. But I also warn about stocks that will drop, such as RDBX or even MULN stock, which I warned at $3 it would be back under $1 within 3 months. So what are you waiting for? If you're not already following me on Twitter, stop missing out on vital information. Subscribe to the YouTube channel and follow me on Twitter. If you like the content and appreciate valuable information, then smash the like button and drop a comment. I would really appreciate if you could help me get 300 likes on this video and hit the bell notification so you never miss a video with the potential to either make you money or save you money. I want to point out that I'm not a financial advisor and this is not financial advice. Now let's get into today's video. In the past few days we have seen an end to this long-running saga. Chicken Soup for the Soul completes Redbox acquisition. So this is now done and dusted. Let's have a quick read of the key details here before I explain exactly what this means going forward for Redbox shareholders, who either kept their stock since the high point months ago or bought more recently. The acquisition of Redbox Entertainment is creating a unified content and distribution offering and brings an end to the strange stock trading around the deal. Existing Redbox shareholders will receive a fixed exchange of 0.087 shares of CSSE per Redbox share. The result is that CSSE shareholders own about 76% of the combined company, with Redbox shareholders owning the other 23.5%. Now this is important and I will come back to this in a moment. RDBX stock closed Wednesday evening at $1.65. CSSE closed at $14.75, implying a value of 1.28 for each Redbox share. But a lot of Redbox shareholders bought the stock at far higher prices than this. Now I have said many times over the past 3 months that the whole deal seemed like a massive user acquisition deal more than anything else. CSSE gets Redbox streaming service and content offerings, as well as the company's 36,000 kiosks that distribute video and game discs to a customer network of over 40 million, which is a very sizable customer base, and this is being used as a basis for Chicken Soup to come up with their huge expectations. CSSE expects that it will exit 2022 with a run rate exceeding $500 million in revenue and 100 to 150 million in adjusted earnings before interest, tax, depreciation and amortization. And it expects to deliver annual run rate cost synergies exceeding $40 million in 2023. Now, for a quick look at this, Chicken Soup's latest earnings report for the first 6 months of the year show net revenue of only $66 million. And from this revenue, they have made a loss before interest and taxes of over $30 million. And for Redbox, they had net revenue of $129 million for 6 months, from which they made a loss before taxes of over $105 million. So that is combined revenue for 6 months of less than $200 million and a combined loss of over $130. This is terrible. Truly terrible. Even if they achieve cost synergy savings of $40 million in 2023, I do not see how it is even remotely possible to turn this around and get a profit of between 100 and 150 million for the year. I don't see how it's actually possible to get a profit at all without using very creative accounting. Even if CSSE did manage to get 500 million run rate this year, it is likely to be less next year and again the following year. Redbox popularity and revenues has been falling year over year for more than a decade. Now, over the past few months, I have warned several times about what was eventually going to happen here. Let's not forget, I was one of the first people on YouTube to talk about this opportunity at Redbox back before it was ever trending, before the CSSE deal was ever officially announced. I tweeted about this when it was only $3 back in April, and then made a video discussing the opportunity just a couple of days later at nearly twice the price. But as soon as I spoke about the risks involved with this stock later in May, I started to get abuse. The stock eventually spiked up to nearly $19 and then dropped back to about $10. Then I made my last Redbox chicken soup video. I was only trying to make sure that ordinary retail investors did not get stung holding the stock for too long. But that is when the abuse really began. Structured abuse by these RDBX paid pumpers to shut me up, which I won't go into right now. But here is some of the basic information from my last video back in June. This is why these paid pumpers felt like they needed to shut me up. The Russell rebalances its index yearly in the last week of June, and Redbox was not on the index prior to this because the company only went public late last year. So this being talked about as a major catalyst is simply not true, unless of course you want to say that 98% of the market has the exact same catalyst. And saying that this will bring a massive increase in volume is not true either. Perhaps for stocks that have a very low trading volume, this will bring an increase, but Redbox has an average trading volume of 21 million, so this will make very little difference overall. So will RDBX stock go up on Monday because of this? No. This makes absolutely no difference to Redbox stock. Anyone saying that this will make a major difference is simply using this to pump the stock. My next point is very simple. The main story is that this stock will squeeze, and when this stock does, it will be like the next AMC or GME. In fact, Redbox actually went as high as $18, so the stock has now dropped nearly 50%, but despite this drop, there is a lot of people adamant that this stock will squeeze. Personally, I think it's over for this squeeze. It has already happened and now it's in its decline. But according to Ortex data, this is still very much on. And so many people are clinging to this. But one thing that is needed for this theory is volume and interest in the stock. And this is something that has been dropping for the past week. The message volume on StockTwits has dropped from over 70,000 to just over 17,000. The stock is no longer trending or ranked among the top most active or top most new watchers. Even the RDBX subreddit is gone quiet, with talk of the Russell inclusion being the only real updates here. Now some will say that this is the calm before it takes off again, but I think the squeeze has already happened and now it's over. That is my opinion, but look at the RDBX stock price. This was less than 180 just a few months ago and it spiked up to $18. That is incredible. That is a 1000% gain for those who got in early, and the majority of them are probably already gone. On to what is next for RDBX shareholders and what will happen to RDBX when the company is acquired by Chicken Soup for the Soul. Redbox stockholders will receive a fixed exchange ratio of 0.087 of a share of Class A common stock of Chicken Soup per Redbox share. So first of all, let's think about this from a logical point of view. For every Redbox share, Redbox shareholders will receive 0.087 of shares of Chicken Soup. So that means that shareholders will get 1 share of CSSE stock for every 11.5 shares of RDBX stock. Redbox stock is currently $9.75, so 11.5 shares of Redbox has a value of just over $112. And in return, shareholders will receive 1 CSSE share for this. CSSE stock is currently trading at $7.79, so this does not make sense at all for Redbox shareholders, but it actually gets far worse than this. But at Redbox stock current price being close to $10, I feel that this could eventually drop around 80% before this merger takes place. So I will be staying well clear of this stock. I said that it would drop about 80%. At the time, this was $9.75 and it dropped to $1.65, so it actually dropped a total of 83%, so I was pretty damn close with my estimation, but it gets far worse than this now. Before I go any further, if you like the content or find value in my videos, then like and subscribe to the channel. The only reason the stock did not go any lower than the $1.65 is because CSSE stock was trading close to $15 on Wednesday. But ultimately, what will happen next to CSSE stock? I am seeing crazy comments on StockTwits and Twitter again now. On the RDBX page telling people not to sell for pennies once they can. Remember that these are the same people who said that Redbox stock was going to $100, but instead it went to $165. These people either have agendas or they do not have a clue what they are talking about and simply sharing the views of other people who do have agendas. It really is that simple. CSSE stock is going to drop. Maybe tomorrow, maybe not tomorrow. Maybe not the following day. But over the course of the next 3 months, this will plummet at least another 30 to 50% from this week's price. And that has nothing to do with shorts. Yes, CSSE stock might be heavily shorted, but in fairness there is good reason for that. And in my opinion there is zero reason to be long on this stock, so let me explain. Now let's look at this Excel sheet that I did up last month, consolidating RDBX and CSSE into one stock. I have updated this to the latest financial reports from this month. As we can see here, Chicken Soup for the Soul has a total of 300 million in assets and total liabilities of 247, which gives Chicken Soup for the Soul total equity of 52 million. By acquiring the shares of RDBX, they have acquired the assets and liabilities of Redbox. The combined company will have total assets of 644 million, total liabilities of 741 million, meaning that the combined company would actually have negative equity of $96 million. This is absolutely terrible. This company is effectively worth less than zero, and this will only get worse. Looking at the combined profit and loss, the two companies combined had revenue of nearly 200 million in the first 6 months. So maybe they will actually be able to achieve 500 million by the end of the year, but they probably won't. Losses were 140 million for 6 months. Even with the $40 million yearly saving costs, they will still have huge losses. This company would need hundreds of millions of dollars to try and get through this over the next few years. CSSE do not have this, and so the current market cap of only 180 million is still grossly overvalued. CSSE stock fell by more than 20% on Thursday and Friday, from about $16 down to $12. And this is only the beginning. This will continue to drop. Personally, I would stay well clear of this stock, and if you were unfortunate enough to be left holding these shares through the merger, then you should be seriously considering your options. Just be aware of the facts that this stock has absolutely no business being at this high of a share price. My opinion is that it will fall 30 to 50% in the near term, but I am not a financial advisor. And I would highly recommend consulting a financial advisor if you do hold shares of these companies. If you enjoyed this video or find any value in this information, then smash the like button, subscribe to the channel if you're new, and follow me on Twitter to stay up to date.